Welcome to TradeTheNBI.com. This is John. This report is for the 24th of Monday, coming off of the Friday quadruple witching hour, which did produce a little bit of action. It really wasn't as dramatic as some might have expected, and really with some of the trade turmoil in that, thought it would be a little bit more active than that, but there seems to be some serious contentment with the way the economy is going, and it wasn't able to produce much of anything. You can see that we're getting a little bit of continued downdraft, but that's just because we're so far from the ABM yellow, and we often get those retraces to it. Plus, we were getting into the near positive extreme area, which those tend to want to fill back in place, which not a surprise because on our 5K chart we had the exact same positive extremes where it turns red here, and usually those lows want to fill back in and retrace. Now, of course, the NASDAQ, while underperforming in the relative appearance of the S&P, is pretty much evened out with return-wise S&P, but it's been under a very weak shakeout, though slightly improving. You're seeing this P2, P3, and what that is representing here is a, in this case, the pivot from right back here. This one was higher, and now you've got a third one, which this last one is higher than the previous one, and that's where those pop up. Normally those produce fairly decent push-throughs, usually after the second one is the one that usually does it, and that really couldn't produce anything, whereas with the S&P, if you look at it, did considerably better. So it was just a matter of rotation, and we knew that was happening because they were getting ready to readjust S&P and which stocks in that were going to be the lead. Most of the bolstering of the S&P comes from that balance extra of the euro. It doesn't seem like much, but a couple of pennies above that 15.5 range, and you get a significant amount of money when you start converting tens of billions of dollars. Makes a huge difference. Bonds have stabilized a little bit. Should continue its downward spiral if things stay consistent, and obviously I think now with the political turmoil, that's going to become more interesting as they really start to make a determination of who's going to win, and that's where the bets will start to get placed, and we'll see that in various stocks. Ideally, obviously, Congress always loves gridlock because it just means that you can't get in the way of business. However, with a pro-business administration, that may not necessarily be as good a thing as not. Oil still maintaining the highs, that if it extends could become a little bit more problematic down the road, and I think that we might see some of that get priced in even earlier, which would be a headwind. And because inflation, while it does get priced into a certain point, if it affects growth at a certain rate, then, and these are the delicate balances, and it's often very difficult to describe because as you see inflation rise, the market will rise with that simply because of the devaluation of the currency, and the market obviously doesn't want to suffer any ill effect from it, and so it gets a proportional movement to it. Here you have gold still unable to move, and we could see that even though it was improving with the shakeout, and that you had gold well underneath the 23. If I even bothered to put it on, it's not even necessary. You can already know it. That's just not going to go anywhere, and it's just not seen a bit, and that's because I think most of it we've seen through oil. But I thought I'd point this one out. This is the 5K chart, and I shrunk it really far down because we had the big giant explosion here from 29.15 coming up, producing all these new highs. I kept saying, hey, you keep an eye on these positive extremes. This is why usually I mark their key points. Whenever they plateau, level off, they become great target points for a retrace. Well, we've already made it down to 23, so it's filled all the way back through here. That just leaves the couple more to go from the end point. So it didn't take long. I mean, there's only a couple of days for it to kind of fill all that back in place. So here's the day marker right here that began the quadruple witching hour. We'll get this all expanded up. I'm going to start it off all positive extremes, pointed out where there was the little cells, came down to our 50% where we started to get a little oversold, and then we got our nice little reset, which led to buys as we moved across. So why not have the magenta over here? You could could, but the problem with this one was the rising red at this, moving over the zero at the same time that's coming in, whereas the difference here, falling red at the exact same point. Okay, so big difference too. Then when gold came in, shot up to the high, and then it was pretty much done, and then that led to a beautiful move to the 23. Really wasn't anything to do because by the time you got your first buy signal right there, boom, overdone already. Before then, if you wanted to wait for the clean DOC spread, there it was as it separated right at the 61% right spot on. Then you get gold below 50, and the rest is history. Coming to the end of the day, you got another potential buy configuration right over here. This early one below the 23%, I didn't even think about it because it just wasn't worth it. But again, yellow coming on that spike wasn't interesting for me to get out of the equation because, well, we had started up here with the shorts and then averaged back in on a little bit of the adjustment. There really was never a reason to be anything but short from the 44 range, and left that over there. Well, I only have one, so it's not a big deal, but I think that you can see it's straight from the 44, which was the secondary entry from the higher move earlier. And that's just simple trading waiting out, and you say, okay, why would you want to go into the weekend? Well, when you have this kind of lows being made and you're looking at readings, there was no turnaround buy possibility, which is also a good point to look at a lot of through this. That orange, cyan, and steel staying way clear of the red. I mean, this was the closest move down to it within that downturn in the negative 23, and it's nothing interesting about buying falling lows. It's sort of a clear cut. And then when the futures ended, sure, you can potentially gap up on a situation like that, but given what we were seeing, it just didn't seem to be. And then with all the positive extremes, even if it had come back, you still would be expecting somewhat of a move lower. So we'll keep an eye on this 29.15. That fills the whole mid-size range, but overall was good. We posted these as they were taking place, and all in all, it was good explanation on the Skype chat. For those that didn't get a chance, you should go back and revisit it on exactly what we were looking for in the execution of all these trades, just to make it clear so that you don't have any questions. And it just makes for exciting intraday action when you're able to see. And this was very clear for such a what was supposed to be, sketchier, volatile day. Really wasn't anything that was going to fool you, because even if you did like the buys that came in on the early ones, you still clearly ended up with a sell signal that would not have caused any fright whatsoever. And even if you had just waited for this final one, which still was at 43.25, it was an easy ride down. So all in all, good stuff. Looks like we're going to have an interesting start to the Monday action as well. So buckle up. It's going to start getting exciting. As always, though, trade well. We'll talk again later.